close out the week with Friday Business here on Business Incorporated. Here's what we have prepared for you. There's a missing fund in Kenya, and they're looking for it. The government of Tanzania is very serious about clean cooking, and they have rolled out their plan. Is the bull run over at Nigeria's stock markets? We'll have that conversation also on the program. Welcome to the program. I'm Ini John McQuarrie. We'll start from the global space as usual, where oil prices fell on Friday, and traders are awaiting that talk between U.S. President Donald Trump and Russian leader Vladimir Putin. That is going to be the biggest market mover for some time now, and expected to lead to easing of sanctions imposed on Moscow over the Ukrainian war. We see for this afternoon, the figures are still in the red. In fact, the red seems deeper than what we had in the morning, even though we are still at $66 level for Brent. The price has gone down 0.45%. WTI is also down more than it was in the morning, is 0.58% in the red. $63.59 a barrel. The market is watching for whether there's a ceasefire or not. An expectation of ceasefire translates to more Russian production coming to the market. The question is, will there be escalation or de-escalation? Chinese government data also shows the factory output growth slumped to an 8-month low, and retail sales growth expanded at its slowest pace since December. That's also weighing on sentiment, despite stronger oil throughput in the world's second largest crude user. And still in the global space, prices of gold edged higher on Friday, buoyed by a weaker dollar, but were poised for a weekly decline after hotter than expected U.S. producer price data dampened prospects for a supersized September rate cut by the Federal Reserve. So look at the numbers. Spot gold is up 0.2%, $3,340.59. It's the same green for U.S. gold, 0.1%, $3,387.50. Spot silver takes the other way, almost 1% down, 0.75 at $37.79. More than that for platinum, 1.19% down at $1,346.50. Palladium, almost 1.5% in the red is what we see. But the price settles at $1,137.50 for an ounce. And then going to what's happening in Kenya, Kenya's Auditor General has revealed that several members of parliament could not account for 4.1 billion Kenyan shilling in national government constituency development funds. And the report shows that 125 constituencies claim to have supported thousands of students with some funds in the year ending June 2024, but they lacked the necessary documentation to substantiate these claims. At the same time, 39 constituencies were unable to support 1.97 billion bursary disbursement, raising concerns about the usage of the funds, while thousands of students in need were denied essential assistance for a smooth education. The exercise was potentially biased, according to the report, because the offices were unable to produce documentation demonstrating the criteria used to determine bursary awards and how candidates had been vetted. Not a good one for the continent at all, where students are suffering instead of focusing on their education. We go to Zimbabwe, where a trade union representing diamond industry workers has petitioned Mines and Mining Development Minister Winston Chitando to halt mass retrenchment by the Zimbabwe Consolidated Diamond Company. The retrenchment has sparked a fierce backlash from the Chidzawa Community Ownership Trust and villagers. As previously reported, the state-owned gem miner has been downsizing, plummeting global diamond prices. And the crisis deepened last week when Mustapa Investment Fund, that's ZCDC's parent company, ordered the termination of a joint venture sales agreement with Dubai-based firm. In a last-ditch effort to save jobs, the Zimbabwe Diamond and Allied Minerals Workers Union has called for government intervention into the matter. And in Tanzania, the Ministry of Energy has unveiled plans to slash taxes on clean energy products to make them more affordable in pursuit of its goal to have 84% of Tanzanians abandon dirty energy sources by 2024. The initiative aims to ensure all citizens switch to clean cooking energy, leaving behind firewood and charcoal, which threaten both health and the environment. The announcement was made by the ministry's Director of Clean Cooking Energy, Mr. Nolasco Mlei. He notes that a lack of clean cooking has severe health and environmental consequences, with the widespread use of firewood and charcoal contributing to deforestation. And here in Nigeria, a workshop was organized by the Federal Inland Revenue Service on e-invoice post-go-live workshop as part of efforts to accelerate the adoption and implementation of national e-invoicing solution for merchant buyer model.
Conditions of service.
It's a workshop organized by the Federal Inland Revenue Service, FIRS, on e-invoice post-go-live as part of its effort to accelerate the adoption and implementation of the national e-invoicing solution for merchant buyer model. In attendance are representatives of the private sector categorized as large taxpayers in Lagos. They have either successfully onboarded or are in the process of being onboarded to the new model.
Since go live, we have actually recorded over 1,000 taxpayers that have successfully onboarded on the platform, representing about 20% of our target group. We have also the first 5 invoice transmissions from first live invoice transmission from pioneering organizations such as MTN Nigeria, Huawei, and IHS Nigeria. The certification of 16 service providers to act as both system integrators and access point providers in the ecosystem. What then is the purpose of this workshop? It is designed to provide practical guidance on taxpayer enablement, integration processes, and real-time invoice transmission. It is also intended to officially introduce some of the certified service providers who will play critical roles in supporting the adoption process. It is to host live technical demonstrations and service provider support tech sessions for hands-on assistance.
For the FIRS, this is an opportunity to explain the technicalities involved. The companies here seem positive about the reforms in the tax space and promise active participation.
E-invoicing of a thing, I think it's a good idea from the FIRS, and it's going to assist in making businesses simplified and get tax paid and remitted promptly. It's a good idea, and the way it will affect my company, I don't think my company is a tax compliance company, and I hope that my vendors and my customers will be able to come on board to see the benefit of e-invoicing. We've been asked to request for their NIN, and I think that would be a good idea to start from. Well, I still want to encourage FIRS to get to the grassroots.
The workshop continues for a second day. The workshop is expected to be replicated in other states of the country. Let's head to the markets now, where Nigeria's stock market sustains the red color. It's still profit-taking, the theme of the game right there in the market, and it's settling more with the insurance stocks, which have been the new baby on the block. So we see for intraday, it's down. We've lost our 146,000 level, lost our 145,000. Now we are 144,000. I wonder what it will look like, you know, by the close of trade. It's down 0.5%. Now let's talk to Kehinde Jones and find out what's going on now. Hi, Kehinde. Thank you so much for joining us on the program. I guess we saw this coming. No market goes on a positive trajectory forever. So this should have been expected.
Yeah.
Hello, can you hear me? Okay, I said, what's happening now? We're still on this red trend. Is the bear still dominating the market sentiment?
If you look at what's going on at the insurance sector currently, because of the the president signed the Insurance Reform Act. And since last week, you will notice that, however, since yesterday, we've been seeing profit taking that is happening in a lot of those stocks. And we should not forget that most insurance stocks are penny stock, and most of them they have the liquidity issues in the market. So a lot of investors are not doing what, are not taking their profit. We can see Lasako on full offer. A lot of sellers want to sell off, and few buyers are ready to buy. Custodia is still in the middle average, where bid and offer is kind of close to each other. Aiko is still kind of close to each other. Cornerstone, we are seeing a lot of sellers and little buyers. So for insurance sector for last week, a lot of people that play were in insurance sector for last week gain about nothing less than on average of 30%. And we saw insurance sector gain year to date about 61%. However, just for last week did above 41%. So I'm seeing that insurance sector will not sustain quarter three, while investors' confidence, investor sentiments will still move back to industrial sector, move back to consumer sector for positioning for quarter three earnings and purpose of final dividend, positioning for purpose of final dividend. You know, industrial sector majorly and the consumer sector earnings are quite impressive. You know, like brass cement, WAPCO, and down cement. If you look at it, majorly the revenue is based on sales of cement. And if you look at the Nigerian infrastructure currently, the rate of infrastructure in Nigeria have increased. Federal government, private companies have increased their construction, and a lot of things are going on in the economy. Foreign exchange is stable, and you will see that now when foreign exchange is stable is around 1,500 plus, you will see most of these companies that are having issues of forex last year have regained their balance in the market. So for me, insurance sector is the market where you just play for short term.
Wow, that's so sad. And I was hoping that by now we would stop saying that insurance stocks are penny stock. Well, thank you so much, Kende Jones, for your views this afternoon.
All right, thanks so much.
Okay, now let's see other markets on the continent. We see the JSE is back on the trend and is building on its 100,000 level, which it regained some time ago. We see Egypt. Egypt is not selling today. They are not open today, but they closed in the red, 0.78. NSE also closed positive for Thursday, 0.87%. Let's see what's happening with the Middle East. Middle East mostly traded positive at intraday. Dubai, 0.5%. Abu Dhabi is in the red, 0.29%. Saudi Arabia and Qatar, they don't trade on Fridays, but they closed in the green yesterday. Heading to the United States to see U.S. stocks stick higher. I guess everybody's still excited, that meeting, and there's emphasis that it's going to be a face-to-face meeting between President Trump and President Putin. Very exciting one. So we see a lot of positives there, but let's look some hours behind. Our correspondent Maria Bird telling us how Thursday's market closed.
The U.S. stock market stalled on Thursday as the Dow Jones was slightly up at 0.02%. The S&P 500 only notched up slightly at 0.03%. And the heavy tech NASDAQ barely made it over flat line at 0.01%. Many investors were watching to see how the reports of the producer price index, as these reports indicated some inflation, which could mean that interest rate cuts in September are not guaranteed. This has many investors watching to see how this will have an impact on the U.S. stock market over the next days and weeks ahead.
Yeah, well, I guess the producer's sentiment also fits into the market right there. For Asia, we see the Nikkei closed positive 1.71. Kospi is closed for today, but closed positive, slightly positive. The Hang Seng Index is, however, down almost 1%, 0.98% for there. Look at the Shanghai, and Shanghai is positive, closed positive, and India is closed today, Friday, but it's closed positive on Thursday. And talking about the markets and sentiments of investors, let's head to our colleagues in DW in Berlin and find out with Lars what's going on there. Hi, Lars. Good afternoon. So what are investors doing? I wonder if they're also excited ahead of the Putin-Trump meeting that we're expecting on the 18th.
Yes, Ini, good to be with you today. It is actually the big thing, obviously, for the European stock markets, too, that Trump-Putin meeting that's about to begin a little later. You know, we're seeing not much action in markets at all. The DAX pretty much flat. At a pretty high level, we're only about 300 points away from an all-time high. But I really got to be honest here, it does almost not matter what markets do today, because that meeting is just the most important thing for markets in the next couple of days. And when it starts, it will already be after market closes here. So whatever happens in Alaska could really move markets after the weekend, if it does move them at all, because you need to be quite honest, we've learned that over the years that even those events investors are looking forward to for a week where there's a lot of speculation, once the meeting is over, it might be a big mover, or it might be an entire non-event as well. So let's see what's going to happen there.
Yeah, well, I think we should start praying from today, Lars, and hope that it's a positive move. We want an end, you know, to this war in Ukraine. For the world's sake, everybody is concerned. But, I mean, 5 years later, we see a new study on remote working. We thought that had become a part of us. So what's the essence of this study, and what does it tell us?
Well, you know, don't we all remember these days? Yeah, depending on the kind of business you do work in. Many of us were either working from home with a laptop in the kitchen, or maybe if you didn't yourself, like you and I being in the studio, you'd find yourself in an almost empty office. Those are, of course, those pictures from 5 years ago. But yeah, things have indeed normalized. This pandemic-style remote working concept has never gone away. And this new study by German economists shows just how widespread it's become. According to these numbers, just about half of all companies, even in the manufacturing sector, has people working remotely. And within the IT sector, of course, it's an entirely different world, with around 80% of companies offering remote work, and with even a full 98% of large IT companies on board. Generally, of course, the study finds that the larger a company is, the bigger the chance that employees have home office options. That is not entirely surprising, dependent on the business, but specifically in the manufacturing sector, because larger companies, of course, seem to have more office jobs, more overhead, and those are the jobs that you can relatively easily do from home. Obviously, in manufacturing, there are still a lot of jobs that just need to be done on site.
So I wonder what companies are saying now. It's a mixture. I actually thought it has been accepted by everyone, but what are companies saying about the advantages and disadvantages of it?
Well, yeah, it's interesting. You know, it's always been very easy to see the advantages employees had with remote working. You know, no commute, no parking, flexibility at home. But what's good for the worker is often good for the company, too. They have come to understand that much better, because companies found that by offering remote work, you make yourself more attractive as an employer in a tight labor market. And with many positions these days being unfilled, that is something HR people are looking into. However, there is also a downside, and there are companies that are ordering employees back to work on location, at least for some days of the week. And the main reason is communication. It's been acknowledged by many that person to person often just works better than having every discussion over Teams or whatever software companies might be using. Many have also said that just interacting personally with your coworkers helps make the company not only a more social place, but often a more flexible or efficient competitor as well. So many companies, including most recently Deutsche Bank, Volkswagen, and software giant SAP, have put some limits in place. However, it's not always been easy. At Deutsche Bank, for example, there was quite some pushback from employees. So these days, Ini, for many firms, it's about balancing home and on-site work to find what is best for the company and for the employee.
Yeah, Lars, that's what I'm looking forward to, when I'll be in the studio with you physically, and we'll do this physically. That will be so much fun.
Always a pleasure, Ini. Have a good weekend.
You too. All right, now let's move to the crypto space and see what's happening. We start from the United States, where the U.S. has imposed sanctions. Oh, okay, there you have a look at the price first. The Bitcoin has been on a run, 124,000. It hit that. It hit that. and made some people richer than some other people. But we see a drop in the last 24 hours, I believe 1.76%, so it's now $118,959. $64. Ethereum is still looking good. In fact, I saw some reports saying that you should keep your eyes on Ethereum now. That's where the next big money is coming from. So Ethereum, however, has lost 1.57. BNB and a whole lot more we see is mostly red in the markets this afternoon. This is a normal Friday look. But we've missed this for a bit, talking about Friday. But let's talk about those headlines making the news where the United States Department of Treasury has put Russia again in the news. So even though we're anticipating and hoping for positive outcome of the meeting between the two presidents, it doesn't mean that the United States is going to chill. So U.S. imposes sanction on Russia payment system. I think about 7 of them. Yeah, Russian A7 payment system. It's a crypto exchange, and also they have sanction on other companies on their sanction. There's a respective decision posted on U.S. Department's website where it says that the department has again put Garantex cryptocurrency exchange on its sanction list because the U.S. believes that Garantex has directly supported known cyber criminals and malware developers processing transactions worth about $100 million since 2019. We haven't had any reaction from Russia yet. Also, away from that, Citigroup is exploring providing stablecoin custody and other services. And then the move is a further sign-sweeping policy changes in Washington and spurring major financial firms to expand into the crypto space. That's no news. We've seen a lot of stablecoin making the news, even in Africa and Nigeria. We've seen a lot of stories around that. Also, that 124,000 level hit by Bitcoin made Nakamoto richer than Bill Gates. So I don't know how to measure this, if he stays richer than Bill Gates or not, because now we see Bitcoin has gone down to 118,000 level. So is it still richer than Bill Gates? I don't know. But I mean, even if it's just for a bit, we saw that record-breaking price rally shaking up the global space, global rich lists, even if it's just for a bit. And then we saw Satoshi taking over from Bill Gates. Approximately 1.09 million BTC valued at $130.7 billion. This cements a position among the world's wealthiest individuals, ranking the 12th. So congratulations to him. Hope it stays that way, or hope not. I mean, whichever, we'll follow the news. But that's it on the program today. Thank you so much for being a part of Business Incorporated. We are happy that you were with us all through the week. Next week is another chance to start doing business again from Monday all through the week. I'll see you tonight. See if I'll be reporting a red market. I wonder. But we'll see. I'm John McQuarrie. Talk to you later tonight.